Hi, this is Kerry Artak with Wicked Stocks, bringing you a YouTube video analysis on the XLF, that is the Financial Sector SPDR ETF. This was recorded Thursday, August 18th, 2022, and we're doing this fund on a regular basis, on a weekly basis, that is. So we'll just see where we go from here, but I do anticipate following this on a pretty regular basis. Let's jump to the charts. In the last video from a week ago, I'd mentioned how last week we settled above this descending channel top that is about, 6-8 months in the making from last year's high, that December high, 33.76. Having settled above it did indicate a 3 to 5 week buy signal up to this descending 2/3 speed line. So I'm using both of these levels sort of in equal strength. 33.76, if tested over the next few weeks, can contain selling into October. From there, we can stabilize, turn back up to 37.18. In terms of will we retrace all the way back to the 41.69 high, the SPY is showing that likelihood right now. But in terms of like the triple Q and the XLF, it's sort of in the not so fast category. 37.18, there's a lot going on up there besides the descending 2/3 speed line, which I like to use as a trend defining tool. I have for years. They work well. Nothing is 100%, of course, but 37.18 still anticipated between now and the end of September. We may reach it within a week or two. 37.18 dropping weekly, and it actually corresponds still nicely with some old areas. You've got that first initial pullback low, which was a significant, rally off of that low. 36.82 was the January low following that January high. I guess it wasn't a December high. It was the January high of 41.69. So we're about 8 months into that, and that 8-month bear market on one count was defined by the 33.76 channel top, which we pushed above. I think that has told us we likely have a good low for the year, but we really need to get up and over 37.18 to keep the sort of updraft intact, whereby within probably 2 to 3 months of closing above 37.18, I would anticipate a retest of that 41.69 high from last January. But getting back to the near term, 36.82 is the start of a range up to 37.18, and you might as well throw in 37.37 while we're at it. That 5/8 upside Fibonacci off the two extremes that you see here, the January high against the recent July low. So between 36.82 and 37.37, I think you can more or less focus on 37.18 to 37.37 as your prime resistance area that can contain buying, at least on a weekly basis, quite possibly through September. And from there, who knows? We could fall back to 33.76 within a matter of 2 to 3 to 5 weeks, perhaps. We could trade inside that gradually widening wedge between 33.76 and 37.18 into later year, into October, November, perhaps. But it is the settlement above 37.18 that, for me, clarifies, will we rally all the way back to 41.69? And I think that's about a 2 to 3 month move at the most if we were to settle above 37.18. So you could trade, if you're a two-sided trader, we get up into the 37 handle on the XLF, you could consider buying, $30 out of the money puts, for instance, because the market is then susceptible to falling back into that zone. I'll show you that in a moment. The 33.76 is dropping weekly, by the way. I don't have the rate at which it's descending. We'll be putting out another one next week, so I'll keep you apprised of these levels on a week-by-week basis. And inversely, if we fall to 33.76 or that support area over the next week, 2 or 3, you could consider buying 36 or 37 out of the money calls because the market then is inclined to rally up into that zone. I think I've covered the upside pretty well. In terms of downside, if we do close any week back below 33.76, this market should fall back into the very low 30s again. That low settlement price was 30.93, and that was put out, I believe, in June, and the actual low itself is 30.37. So that whole 30 handle, if you will, is just loaded with important levels that I think could contain selling on a monthly basis. So closing below 33.76, I think we've got a maybe a 2 to 3 week, 3 to 5 week sell signal back into the low 30s. And the truth is there is a longer term support level that's climbing that supports all this at 28.23. So this image here sort of shows, this is a scenario that I think you should allow for. If you're a longer term trader of the XLF and we happen to close below 33.76, that would be considered a pretty classic failed buy signal. In essence, a valid sign of weakness as we continue into September, October. First stop is the 30 handle, 30.37 to 30.93. That could be in as little as 2 to 3 weeks. I'd give it 3 to 5. But as we continue into October, November, within a couple of months of closing back below 33.76, it wouldn't surprise me to see that 28.23 rising 2/3 speed line that's projected off the March 2020 COVID low. And that is long-term support that can contain quarterly, possibly annual selling pressures. I also mentioned that the Triple Q, the NASDAQ 100, held that 2/3 speed line at 28.23 in the XLF. It was tested in the NASDAQ 100, tested in the Triple Q, of course. They're really the same market, and it held beautifully. Subsequently, on a number of tests, probably half a dozen tests between the middle of June and early July before that market turned up and started showing buy signals to the upside. So bottom line, closing back below 33.76, that 28.23 speed line wouldn't surprise me. I'll say, by the end of October into November, within a couple of months of doing so. But we're not there. We're actually bullish, at least near term, which is to say well into September, above 33.76, still anticipating the 37 handle as our next big test, which can contain monthly buying pressures. Possibly longer than that. We could fall off, as I say, from 37.18 back to 33.76 and fill that opening wedge out for several months to come. And then, of course, closing above 37.18 would be the final shoe to drop, in my opinion, for expecting a retest of that 41.69 January high within about 2 to 3 months. I think that pretty much sums it up for this week's Financial Select Sector SPDR Fund ETF, the XLF. And I think I'll just leave it at that. You have a great day.